Welcome back to the channel. Today we're diving into something crucial: staying safe in the crypto space. Cryptocurrency can offer incredible opportunities, but there are also risks you need to be aware of. Scams are unfortunately common, and they come in many forms. Whether you're a beginner or an experienced investor, you need to be able to spot these scams to protect your hard-earned money. In this video, we're going to cover the top crypto scams to watch out for and how you can avoid them. Over the past few years, we've seen a sharp increase in both the number and complexity of crypto hacks and scams. As the crypto market grows, so does the target on its back. 2021 and 2022 saw some of the largest hacks to date, like the Ronin network hack, where over $600 million was stolen in an attack on the gaming platform Axie Infinity. Another major breach was the Poly network hack, where attackers exploited vulnerabilities in smart contracts and stole over $600 million, though a majority of the funds were later returned. These hacks highlight a disturbing trend. As blockchain technology evolves, so does the techniques used by attackers. Scammers are developing increasingly sophisticated methods, from targeting vulnerabilities in DeFi protocols to using phishing and social engineering attacks on unsuspecting investors. With this rise in complexity, it's crucial for investors to stay vigilant, conduct thorough research, and follow best practices, which I'll be discussing in this video. Many experts warn that crypto scams are likely to grow in scale, and as you can see from the numbers just in 2024, this is true. As more people enter the space, the appeal of high-stakes hacking will continue to attract cybercriminals. The future of crypto will require both technological innovation and more robust security measures to safeguard users' funds and build trust in the industry. So let's start with phishing scams. One of the most common and dangerous types of scams in the crypto world. Phishing scams often involve fake emails, websites, or even social media messages designed to steal your personal information or private keys. These fraudulent messages look like they come from legitimate companies or exchanges, but will end up redirecting you to a fake website. Once you enter your login information, the scammers can access your wallet or exchange account and then drain your funds. A prime example could be scammers pretending to be from a major exchange like Coinbase and sending you an email asking you to verify your account or reset your password. So some tips on how to protect yourself from phishing scams. Double check the sender's email address and make sure that you can verify and validate this. Also validate the URL that you're about to click on, whether it's in an email or social media message. Another thing is legitimate companies will never ask you for your private keys or passwords, so never ever share this with anyone. Enable two-factor authentication on all your accounts for that extra layer of security. This should be quite simple on most apps and companies. You can usually just go into the settings and check security and enable that two-factor authentication. Another thing is secure passwords. Always use secure passwords and try not to recycle passwords that you've used elsewhere. Also, regularly update your software, make sure everything's up to date, whether it's an app store or your phone's software. Next up, we have Ponzi schemes and pyramid scams. So Ponzi schemes have been around long before cryptocurrency, but they found a new life in the space. A Ponzi scheme in crypto usually promises high returns with little to no risk. Early investors are paid using the funds of new investors, creating the illusion of profitability. However, when new investors stop coming in, the whole scheme collapses, leaving most people with nothing. Prime example of this is BitConnect, which was a notorious Ponzi scheme that collapsed in 2018, leaving investors with huge losses after promising daily returns on their Bitcoin deposits. Also, you can probably look around the meme coin world and you'll see many Ponzi schemes out there. So some tips on how to avoid these. First, always research the project, founders, and the system they use. Look for transparency in their business model and payment processes, and make sure the founders have verifiable backgrounds. Avoid schemes that promise guaranteed high returns. This is virtually impossible in a real investment. Pay attention to how these platforms operate. A legitimate crypto project will have a realistic and sustainable method of generating returns. Beware of any scheme that focuses more on recruitment than on the actual product or technology. Stay skeptical and alert to unprofessional conduct, sudden announcements, or impulsive decision-making by the company. And if you're using a wallet to hold your funds, make sure you've done your research to ensure it's a reputable and secure option. Remember, staying cautious and doing your homework is your best defense against falling into these traps. As you can see, next up we have fake ICOs and rug pulls. An ICO, or initial coin offering, is when a new cryptocurrency project offers tokens for sale to raise funds. While many legitimate projects have been launched this way, scammers often create fake ICOs to lure in investors, only to disappear with the funds later on. Rug pulls are similar. They happen when the project creators suddenly withdraw all liquidity, leaving investors with worthless tokens. A prime example of this, as you all probably know, the TV show Squid Game, which was extremely popular, which was then followed by a Squid Game token which was released, which ended up being a massive rug pull scam that took advantage of the show's popularity. Investors lost millions when the project's creators vanished with all their money. As you can see here, the Squid Game chart, and you can see visually the massive drop that happened. So how to protect yourself from ICOs and rug pulls? First, research thoroughly. Dive deep into the project's white paper, roadmap, and official channels. A reputable project will have clear goals and transparent funding plans. Second, check the team's credibility. Look for a team with verifiable, reputable backgrounds and examine the project's community engagement. If the developers or founders are anonymous, that's a major red flag. Next, see if the code is open source. Open source projects allow the public to inspect and verify the code, which builds trust. Also read reviews from trusted sources and look for audits from well-known security firms. Audits provide a layer of assurance that the project has been scrutinized for vulnerabilities. Analyze liquidity and monitor transactions to ensure there's no irregularities, and check token distribution to see if it's overly concentrated in a few hands, which can be a sign of manipulation. Be wary of projects that promise high APY or yield guarantees. These often lure investors into Ponzi-like schemes. Finally, anonymous project ownership is a huge red flag. Legitimate projects usually have transparent leadership. By following these steps, hopefully you can navigate the world of ICOs more securely and reduce the risk of falling into a scam. Now we're moving on to impersonation scams. So impersonation scams involve scammers pretending to be well-known figures in the crypto space or even entire companies. They'll often promote fake giveaways or investments, asking you to send a small amount of crypto with the promise of sending back double or triple. And I guess, spoiler alert, they never do. Prime examples of this was something that's still ongoing, fake Elon Musk giveaways. You can see them all over X, where many people have been scammed and they're impersonating him on social media, promising huge returns if you send crypto to a specific wallet. Some other examples can be impersonating accounts like Coinbase, MetaMask, asking for private keys on passwords, etc. Again, how to protect yourself from these sort of things. Just note, no legitimate company will ask you to send cryptocurrency or ask for your private keys. Another thing, no one will double your money automatically. Verify your accounts and don't trust anyone. A blue tick on X doesn't mean that the account is legitimate and validated. Always check announcements and links carefully before clicking anything. And also, if you're in a tough situation and you see some message where you might get double your money or triple your money, or someone's trying to help you out, it's usually a big red flag. Don't believe everything you read and always stay vigilant. Another scam to watch out for is fake exchanges and wallets. These look just like the real thing, but are designed specifically to steal your funds or any credentials that you may use. So when you deposit your cryptocurrency, the scammers vanish and all your assets are then gone for good. Prime examples of this can be creating lookalike websites for popular exchanges like Binance, or wallet apps that mimic trusted companies like MetaMask or Trust Wallet. So how to protect yourself from fake crypto exchanges and wallets? First, download legitimate apps only from official app stores. Always check app reviews, ratings, and the number of downloads. Fake apps can often be identified by low download count or poor reviews. Access websites only from legitimate sources. Bookmark official sites and avoid links shared in emails or social media messages, as these are common phishing tactics. Check the sender's email and URL carefully. Scammers often use addresses that look legitimate but have slight differences. For example, they may replace an I with a 1 or use an unusual domain ending. Don't click on unsolicited social media messages. Many scammers use these platforms to spread phishing links and fake offers. Avoid signing up for investor programs or websites without thorough research. If something looks too good to be true, it usually is. Look up reviews, check forums, and see if they're listed with reputable regulatory bodies like the FCA. Also, never engage with unsolicited calls claiming to be from cryptocurrencies or some new investment idea. If you get such a call, simply hang up. Reputable companies won't ask for sensitive information over the phone. So hopefully by following these steps, you can protect yourself from fake exchanges and wallet scams, keeping your crypto assets secure. Of course, next up we have the pump and dump scheme. So pump and dumps occur when scammers hype up a small, relatively unknown cryptocurrency to artificially inflate its price. Once enough people buy in, driving the price up, the scammers sell off their holdings, causing the price to crash and leaving investors with massive losses. Prime example of this can be a group. They might start promoting a small token on social media, claiming it's the next big thing, then dump all their holdings once the price spikes. So here's how you can protect yourself from pump and dumps. Something I've mentioned several times in this video already: research any project thoroughly. Look into the development team, partnerships, the utility behind the token. A strong project usually has transparent teams and clear use cases. Stay cautious of social media hype. Many pump and dumps start on platforms like Telegram, Discord, or X, with influencers and anonymous accounts spreading hype. If a project seems to be growing only due to online chatter without a clear roadmap or actual progress, just be cautious. Look for organic growth, not artificial price inflation. Genuine projects grow steadily based on real demand, whereas pump and dumps will show sharp, unsustainable spikes. Check trading volumes and patterns. Unusual trading patterns like sudden massive volumes can be a sign of manipulation. This can indicate large players moving the market to benefit their own positions. Examine the reputation of the exchange where the coin is listed and the audit process that it follows. Reputable exchanges tend to have stricter listing criteria, which can help filter out shady projects. Analyze the token distribution and tokenomics. If a few wallets hold a large portion of the supply, this increases the likelihood of a pump and dump scenario, as a small group can easily manipulate the price. Stay up to date with the latest scams and red flags. Obviously, knowledge is power, and being aware of common tactics will help you spot potential scams early on. Use tools to track wallet movements and observe suspicious behavior. There are online tools that let you monitor large wallet transactions, which can be really useful to spot signs of coordinated selling. And finally, avoid short-term investments in highly volatile projects. This can save you from falling victim to sudden market swings orchestrated by pump and dump groups. By staying vigilant and conducting thorough research, you can better protect yourself against these schemes and make more informed decisions in the market. So scammers can also use malware to steal your funds. This malware can infect your computer or smartphone, allowing the scammer to access your wallet or exchange accounts. These can be done in the form of fake apps in the Google Play Store or Apple Store that appear to be legitimate wallets or trading platforms. So here's how you can protect yourself. First, only download apps from legitimate, official and verified sources. Stick to trusted platforms like Apple Store, Google Store, and avoid sideloading apps from unknown websites. These unofficial downloads are often embedded with malware designed to steal your funds. Inspect app permissions carefully. Be cautious if an app requests permissions that seem excessive or unnecessary for its function, as this can be a massive red flag for malicious intent. Read app reviews on the store and online. Check for recent detailed reviews that discuss the app's functionality, and be wary of apps with a lot of negative feedback or suspicious positive generic reviews. Verify developer information and credentials. Many malicious apps try to mimic popular wallets by using similar names and logos. Check the developer's name to make sure it matches the legitimate company's name. Ensure HTTPS and site security whenever visiting crypto-related websites. Look for a padlock icon in the URL bar which indicates the website is secure and your connection is encrypted. Always update firmware and apps on time, but avoid downloading beta versions. Updates often contain security patches that protect you from the latest vulnerabilities. Sticking to stable releases ensures you're using software that's been thoroughly tested. Avoid clicking on email links for signing into your crypto accounts. Instead, type the URL directly into your browser or use your bookmarks. Phishing emails are a common way for scammers to direct you to fake sites designed to capture your login credentials. Use a VPN, especially on public Wi-Fi. Public networks are more susceptible to hacking, so using a VPN adds an extra layer of encryption to keep your connection secure. Lastly, verify crypto addresses carefully when sending funds. Malware can sometimes alter the address in your clipboard, sending your funds to the hacker's wallet instead. Double check the address is a simple step that can prevent huge losses. Social media platforms and messaging apps like Telegram or WhatsApp are common places for crypto scams. Scammers often pose as official support accounts or admins of crypto groups, asking you to provide private keys or account information to help you. Prime example of this is you may get a message from someone claiming to be an admin of a Telegram group or a Discord group, asking for your wallet details to resolve some problem that you might have had. So how to protect yourself? So no company or member will ever ask you for your private keys or passwords. Don't engage in private messaging offers, whether it's investments or sending money. Disabled direct messages from unknown senders. Only use official and legitimate links to join project groups. Secure social media accounts with 2FA, again, and strong passwords. Report and block spammers. Report and block scammers. Validate handle names and social media accounts, and again, be cautious of influencer promotions. Let's talk about DeFi exploits and crypto farming. So DeFi stands for decentralized finance, where financial services like lending, borrowing, and trading operate without intermediaries through smart contracts. But these smart contracts can have coding flaws, and that's where hackers come in. One type of exploit is the flash loan attack. Here's how it works. An attacker borrows a large amount of crypto through a prime example of this would be a flash attack. One type of exploit is the flash loan attack. So this is where the attacker borrows a large amount of crypto through a flash loan, meaning they don't need any collateral. Then they manipulate the price of assets on the platform and repay the loan, keeping the profit. This can happen all within seconds. For example, back in 2020, a platform called BZX lost over $1 million in just minutes from a flash loan attack. So next, what is crypto farming? In the cryptocurrency world, farming typically refers to yield farming or liquidity mining, and here's how it works. So yield farming is where investors provide liquidity to a DeFi platform in exchange for interest or new tokens, and liquidity mining is where users contribute their crypto to liquidity pools and earn rewards in the form of tokens or transaction fees. However, with great returns often comes great risk. Crypto farming scams usually exploit the allure of high returns and can take various forms, including fake platforms. Scammers can create fake DeFi platforms that promise unrealistic yields. Unsuspecting users invest their crypto only to find out the platform vanishes overnight, taking their funds with it. And again, phishing attacks. So scammers can even impersonate legitimate platforms through emails or social media, urging users to click on links to a fake site. And another way is pump and dump schemes. So scammers might even promote obscure tokens that promise high returns from farming. Once the price is artificially inflated, the scammers sell their holdings, causing the price to crash and leaving investors with worthless tokens. Crypto farming and DeFi platforms can be highly profitable, but also risky. Here are some essential tips to help you stay safe. First, always use established and audited platforms. Many newer platforms may not have undergone thorough security checks, making them vulnerable to exploits. Check whether the platform has been audited by reputable security firms and how it manages Oracle dependence. Oracles are third-party services that feed external data to smart contracts. Relying on them can introduce vulnerabilities if the Oracle is compromised. It's also critical to limit your investment to an amount you're comfortable losing, as DeFi exploits can wipe out funds unexpectedly. Stay updated on recent exploits by following trustworthy threads on X and other social media to know about the latest tactics and vulnerabilities. Don't fall for appearances either. Just because a site looks professional or has high-profile followers doesn't mean it's trustworthy. Meme coin farming, for example, may use bots for transactions and volume manipulation, giving the impression of high activity. Remember, even on-chain metrics can sometimes be manipulated, and buying followers is not difficult. Finally, always do your research. DeFi can be complex, and careful vetting of platforms can make all the difference. So some key takeaways. Scammers are constantly evolving. As the technology world becomes more complex and we have various ways of investing your money and new platforms being released day by day, new coins being released, you have to stay informed and practice caution so you can protect yourself and your investments. Remember, if it sounds too good to be true, it probably is. Always do your research, never share your private keys, and be skeptical of unsolicited offers or messages. Stay safe out there, and I'll see you in the next video. Don't forget to like and subscribe, and hit that notification bell to stay up to date on everything crypto and blockchain. Thank you.